Hello and welcome, Rahul. You're watching my YouTube channel for Talks. And if you're watching me consistently, welcome back to my channel. See, whenever I come in front of you, I have a purpose. I want to instill positivity. I want to instill some curiosity and knowledge so that everyone who is embarking on this journey, they can transform their ability and they can leverage these knowledge and information. Because in this information is, if we will be leveraging all the information around, we can own our skills and further we can apply these skills to make a better emolument or any kind of profit out of that. So if you really want to be in trade or if you really want to be in business, any business, minding your job or minding your work is your business. So everybody who is engaged, in something positive, who is really investing their time in something valuable so that they can learn something, so that they can transform their own skills, so they are actually leveraging these skills and these informations, and that is what I want. I want you to invest your time something valuable, not in futile rails where you'll be investing your time and getting nothing in return, rather than something positive. And I just want to tell you exactly that if you will have knowledge, what is balance sheet and how companies work, and how banks work, how businesses can be built, you'll have a deep analysis, and you will understand exactly how to walk ahead and how to make yourself an entrepreneur. In previous videos, I have talked about what are private limited companies, what are how to make it public, how to leverage your MSME's business, even how to make it bigger. I have talked about that, and I have talked about banking industry as well. How you can leverage loans from banks and what kind of retail loans, and even I have talked about business loans, CCs, cash credit and other working capital assessment and term loan assessment for your capital requirement for your business, and fixed asset requirement that are financed. Everything I have talked about and have delineated. So if you want to visualize all these things, you go to previous videos and you can watch that. And very earlier I have talked about capital markets, and primary markets. So capital market, knowing about share and debentures and equities, they are also important. If you have all this knowledge, you can make yourself a better personality. Today I'm going to dive into banks, banks balance sheet, what is actually bank, how it functions. And once you'll have this knowledge, you can link your business with these knowledge. And if you have really in-depth knowledge of bank balance sheet and banks, how it functions, you can make really progress in your professional life as well if you are a banker. Because most of the people who are watching my videos, they are bankers, and it would be really beneficial for them. And if you are an entrepreneur, you will be also beneficial of that. So why don't you look at that? You should be knowing about balance sheet, and how it is everything about business, everything about business. And once you'll have deep insight about business, how to run that, you will have leverage, you will have better advantage. That is what I want you to provide. So talk about banks, how banks works. Whatever loans you get from bank, these all are financed through deposits. Deposits are the public's money, and they are liability to the bank. So banks leverage that deposit and it advances that, it gives loans to you, and that loans is an asset of the bank, whereas your deposits are liability to the bank. So how it actually works, what is balance sheet? Whenever you will watch balance sheet, there is a liability side, there is an asset side. And when you will talk about liability, there are capitals and reserves and surplus, there are long-term liabilities, there are short-term liabilities. When you talk about asset side, then you have fixed assets, then you have long, non-current assets and current assets, and intangible assets. So these are the things that I have already talked about and delineated very deeply. If you watch those videos, you'll understand exactly what is balance sheet. But I'm going to talk about deeply about banks balance sheet, how banks functions. Capital and reserves on liability side. Capital, share capital. What is share capital? If you will talk about shares, shares are equities. Shares are the ownership in a company. The share capital of banks are ownership in banks. Shares which are traded in a stock exchange in secondary market. Shares are traded, but initially it is offered in primary market as an IPO or FPOs. Initial public offering or follow-on public offering or bank capital. Later on it is traded on secondary market. So you understood shares. Share are ownership in a company. And if you really want to know what is bonds and debenture, I would like to give you a deep insight about bonds. bonds are most of the time legally it is a liability, to the company, because they are trading the bond. Actually, you are giving them money and they are signing the bond, they are giving you bonds, they are telling you that they will give certain interest on that very bond, they will give certain interest and certain percentage of that as a benefit to you. And in return, if it is a bond, it could be secured by the assets, but whereas debentures are not secured by the asset, but they are also debt instruments, but in case of banks, bonds, are classified. Some bonds are classified as capital, tier 2 capital. Infrastructure bonds are tier 2 capital. Some are perpetual bonds, which are for longer terms, which are perpetual almost, so they are classified in additional tier 1 capital. So there are two types of capital actually: tier 1 capital, common equity capital for banks, which are share capitals, and cash and reserves and surplus for banks. Next one is additional tier 1 capital. These are perpetual bonds. You don't understand perpetual bonds, which are secured for you. Which are secured for, because they are secured as collateral. Yeah, as banks assets. And third one is, third means second one, I will say tier 2 capital. One is tier 1 capital, common equity, and its part is another one is additional tier 1 capital, and the second one is tier 2 capital, which are mostly infrastructure bonds or some additional debentures or bonds, which are issued. So some bonds are classified, as per Basel norm 3, they are classified as capital in Indian banks. If you look at their balance sheet, not only in Indian banks, but Basel complies and followed by mostly every bank, in the world. So Basel norms also applies to Indian banks, and that's why they have classified tier 2 capital. So these are the capital of the banks. Next one is long-term liabilities and short-term liabilities. Whatever deposits banks get, if these deposits are in saving bank deposits or current bank deposits, these are short-term liabilities. This can be withdrawn on demand in short time of period. And if the FDs, fixed deposits, are less than 1 year maturity, then it is also short-term deposit for banks, short-term liabilities for bank, a long-term deposit from FDs for more than 1 year. These are long-term liabilities of the bank. So bank actually leverages these long-term and short-term liabilities to finance advances to create assets, whereas the capitals, the share capitals, and infrastructure bonds, these are its capitals which are there for absorbing loss, and meeting the capital adequacy requirement. CAR, you already often you listen that CAR, you know RBI has mandated, Basel has mandated, Basel committee has mandated for capital adequacy ratio, that this should be the capital adequacy, ratio of your balance sheet of your bank. Whatever advances it does, whatever asset is created as loans, it has risk. If you give money to someone, it has risk. So every loans are given risk. Banks can give loans to even governments. So these are supported by government securities. These are the low risk assets, and thereafter whatever asset it gives, it has 100% at least risk. Some are secured, like home loans, where 50% risk could be assigned, but most of the corporate loans are 100% risk is assigned to that. And more than that, if it is risky, like MSMEs and other industries, if you're providing loans with 150% risk weight is provided on those assets. So all the risk weight is calculated on all the assets of the bank that are loans, and that will be in denominator, and at the first numerator will be tier 1 capital that I have told you, shares, share capital and reserves and surplus, tier 1 capital, and AT1 capital as well, additional tier 1 capital, plus tier 2 capital, infrastructure bonds and other bonds, and debenture that qualifies for capital. So these are in numerator, tier 1 capital, tier 2 capital, and denominator, I have told you the risk weighted assets of all the assets of the bank and assigned risk. If 100 rupees assets of the bank and assigned risk is 120 something, as per its categorization. So whatever the numerator and denominator, you will divide that, whatever will come, that will be capital adequacy ratio, CAR of the bank. And CAR or CAR, CAR CRAR, capital risk adequacy ratio, is actually given 9% by RBI. At least you have to keep 9%. Additional 2.5% capital conservation buffer. That means 11.5% banks usually target, and they have to give it more than that. Even Indian Bank where I work, they are maintaining it at 15.92%. So it is quite good. They have good capital. They're maintaining good capital. That is what is car. That is what is showing it. So now you understood what is tier 1 capital, what is the additional tier 1 capital, what is tier 2 capital, how loans are financed, how loans are supported by the short-term liabilities and long-term liabilities of the bank, and whatever bank gets out of the asset, net interest margin, that creates its profits. Other expenses would be, if you look after profit and loss statement, other expenses will be, and cash flows, and those all will be added, and then profit, operating profit, and then net profit will be calculated. So these are the terms that you should know exactly. And if you know exactly what is the balance sheet, how it is balanced, liabilities and asset side, and what is profit and loss assessment, what are cash flows, all these things, if you know deeply, you'll have a deep insight about businesses, how it runs. If you have your personal business, you'll have liabilities, you know as creditors who will give you money to invest, to infuse in your business, or credit money for your stocks, for your work in progress, which is your asset. You're taking money, short-term liabilities, as creditors, or long-term liabilities, maybe some borrowings from bank like term loan. These are your liabilities, and you use it to generate, your assets, long-term assets and short-term assets. So these are the things that you should know. If term loan is coming, you will finance it to capital, fixed assets, not this capital in fixed assets. So these are, you have to understand exactly how balance sheet works. And once you'll have deep knowledge about that, you can make miracle in life. That is what will be your reality, because you'll have deep knowledge about balance sheets and all these things. And once we dive into asset side, just look, because I have delineated all the retail assets, of banks, retail loans, agriculture loans, and MSME loans of banks, mostly not corporate loans, because they are mostly deal with the large, large corporate branches. So we haven't been part of that, and I do not, most of the different loans have been covered in agriculture and retail and MSMEs, and corporate loans are mostly handled by large branches. But if you have insights about your working capital, and term loans, which I have delineated, you will know exactly how loans are being done to these companies. So overall structure will be created in your mind when you will watch all these videos. So what happens after that? If loans are given, what happens after that? How businesses run of Indian banks? That is what you have to understand. After loans are given, they will pay as an EMI if it is term loan, or if it is working capital, the cash flow will happen, and interest will be served as per credits, in CCs or in ODs. So if it is not happening, suppose the due date is surpassing, loan EMI due date is surpassing, then wow, how these assets are classified, that you have to also know. You have to know also, and that is classified as SMA if it is more than 30 days from due date. If it is 30 days from overdue has happened and 30 days it's continuing, those 30 days period is SMA 0. Thereafter next 30 days SMA 1, thereafter next 30 days SMA 2. These are the assets that are classified. Thereafter, if it goes beyond 90 days, it is classified as non-performing assets, because it is not adding to the book balance, not adding any profit to the book balance of the banks. That is why it is classified as non-performing assets. And once it goes non-performing asset, banks has to do provisioning on that. Even nowadays, standard assets, the standard assets, which has to be repaid, before 90 days, some provisioning are being done, 0.40% for that, and if it is corporate real estate, then 1% provisioning you have to do. And if it is restructured loans, some loans are restructured, then you have to do 2% provisioning. And if it goes in NPAs, then there is a different mechanism. You have to do provisioning for 25% at least if it is secured, and if it is unsecured, then there is only one way. You have to do 100% provisioning, you know. So what happens if it goes in doubtful classifications? There is non-performing asset, thereafter doubtful asset, doubtful 1, doubtful 2, doubtful 3, thereafter loss asset, you know. In non-performing asset, if it sustains for 12 months in non-performing asset, after that it goes to doubtful 1 asset, and there it lives for 12 months as well, for 1 year. There you have to do at least uh, uh, 40% provisioning for that, 25% provisioning for that. And if it is unsecured, then 100%. And if it goes to doubtful 2, then 100% provisioning. Even then it is secure, 12%, 12 months to 36 months. Even then, if it is secure, you have to do 100% provisioning for unsecured and secure. And if it is doubtful 2 and doubtful 3, then you have to do 100%, 25%, 40%, 100% for secure, and 100% for unsecured. Thereafter, if it is classified as lost asset, if bank recognizes it, internal auditor recognize it, or RBI auditor comes and it recognize it as a loss asset, it goes to loss asset. So these are the classification of assets. If it is performing, then the interest is being realized, the principal is being realized, then it is okay. That is providing to you net interest money. If it is not performing, then you have to do provisioning from your assets. That is why you would have known about gross NPA and net NPA. Gross NPA is total NPA of the bank, which is non-performing, and net NPA is when you minus the provisioning, and other provisioning that you have kept for that. When you minus that, then net NPA comes. So these are the ways, for monitoring and recovery of its asset that banks does. There are many ways after that. Even when it is turning to a non-performing asset, banks has a way, SARFAESI Act that you would have known, which is very intricate, because I will say that intricate, but most of the banks are doing that. When SARFAESI came, the banks are able to, sell their mortgage property, their secured assets, and they are realizing their debt. So that is a very good tool for banks, SARFAESI Act. But SARFAESI is a long process. You have to know when it is going to non-performing, how will you apply SARFAESI. Many people know exactly that it is a long time taking process, but they have to go through how SARFAESI is done. After 3 or 5 days, they have to give demand notice in SARFAESI Act 13(2). There is a clause in 13(2). As per section 13(2), they have to give demand notice for 60 days. They have to give to the borrowers. They have to either send it through post or speed post, and if it is not obtained, then you have to go there. Chief manager along with her branch staff will go. They will fix the notice on on the conspicuous position, the visible position of the assets, where the property is there. They'll fix those notice, and they will then photograph will be taken, it will be published in newspaper, in vernacular language and in another language. And then when it will be published, you have to wait for 60 days, and thereafter you can go to take possession, even symbolic position or an actual position. If you are getting symbolic position, then you have to paste symbolic possession notice, and the same process will follow. And if you are symbolic possession you have gotten, then physical possession, if you are getting that easily, then it is okay. Otherwise you have to take permission of DM, CJM, you have to apply there, and within 60 days they will give you the actual possession order, when force will go to take actual possession, physical possession of the property, and then you take possession. After that you have to publish, sale notice you have to give, and sale notice you have to again wait for 30 days. After giving sale notice, you have to also publish it in newspaper, same way, to vernacular language and English language. Thereafter, when sale notice will happen, it will be it will be tendered, or it will be going in e-auctions. Nowadays e-auction is happening, where 15% will be realized by the bidders. KYC will be registered on sites. If bidders will apply, and then it will be sold out, and the sales certificate will be given after 15%, 25% deposit. 75% will be realized within 15 days, or maximum to 90 days. If the time will be given after 15 days to them, so maximum 90 days time will be given, but interest will be charged on that. So sale is not, this is not an easy process, but we have to go through that, all these legal processes. Even we have to give caveat on sale notice. We have to take permission from DRT or the respected court, caveat. So these are the long processes in SARFAESI, but we have to go through that in order to make our assets, because these are the way banks run. And you have total understanding what are the deposit side, what are the, today I talked about recovery side, monitoring side. When it is in SMA, how the monitoring happens at different stages, SMA 1, SMA 0 and SMA 2, at these stages. Then recovery sides, SARFAESI Act I have talked about, and previously I've talked about loans, how to do that with loans. So you'll have an in-depth knowledge, and you know exactly balance sheet of the bank, how capitals of the banks run. So you have in-depth knowledge of banks. All these knowledge if you have, you can certainly move through in your life, and you will have deep knowledge. If you're a banker, you will certainly be on advantage side. You will be beneficial if you will watch all these videos. And next thing I'm telling you, that be someone who can have purpose in life. If you have purpose and if you have motivation, if you'll be keeping yourself awake all the time, you can do miracles in life, because someone is listening, the system is listening to you. It is not conscious, but it is programmed in such a way, and conscious entities are given responsibilities. As you are given responsibilities in your life to take care of your life, the same things happen in the programs, and we have to play our roles. And if we will do something better, the world will be a better place to live, and that is what I promise you. If whatever I can do, I'm doing that, and whatever you can do, if you will do that, the world will be a beautiful place. Thank you for listening to me.